Break-even point. The break-even point for any bear call spread at expiration can be calculated in advance. Below this point, you could expect a profit, and above this point, you could expect to see at least a partial loss, assuming that all options are worth their intrinsic values as they expire. A bear call spread is considered a moderately bearish strategy, primarily because your downside profit potential is limited. The theoretical maximum profit for any bear call spread at expiration is limited to the credit received when the spread was originally sold, no matter how low the underlying stock declines in price. This will happen if the stock closes below the lower or short strike price, and both options expire out of the money with no value. We would like to thank you for taking the time to watch the videos that we have put together for you today. Take a look and subscribe to our YouTube channel, our Instagram, our Facebook page, and reach out if you have additional questions. We would love to hear from you. Check out our website for more information. Go to www.optiontradersnetwork.com. Thanks so much.